Hello everyone, welcome to the IchimokuCharts.com daily analysis for the Euro-US dollar FX for Wednesday, February the 22nd, 2012. Well, the spinning top type candle today, and the candle we're analysing is the one we're highlighting here. The last candle on the page is still developing. Spinning top type candle denotes indecision in the market, and if we look at this candle, it's completely within the range of the previous candle. In bar chart terms, that's what we call an inside bar or an inside day, and that by itself is a candle of indecision, and that's because the buyers weren't strong enough to take out the high, but the sellers weren't strong enough to take out the low. Now, it's also an indecisive candle, spinning top type candle, because we have a small body and a shadow on the top and the bottom, and the shadow on the top represents downside price rejection. And we can see a price rejection from this area where the market was rejected from over the previous 3 days. So this is a third day in a row where the buyers have lost commitment when they've attempted to trade up to higher levels, especially up to around this 133 level. By the same token, however, the sellers lost commitment as they attempted to trade down to below the 132 level, and we could see the buyers coming in around that area. So very indecisive trading at the moment. We do have the market attempting to break out of the top of the cloud, and it doesn't really seem to want to go on with that move. There's a lot of hesitancy from the buyers with this potential breakout. If we do see a breakout above the cloud, that would be a bullish signal with the Ichimoku charts, but I'd prefer to see a bullish breakout with the buyers having some sort of momentum to the upside to confirm the breakout before we consider that to be a significant breakout. If we do see a breakout, the resistance does extend up to the 133.20 area, so that's a very important level. But above there we also have very strong resistance. We can see the shadows on the top of all these candles extending all the way up to 135.50, so very strong resistance all the way above. To the downside, we do have strong support all the way through to the bottom of the cloud, and that extends down to about 128.5, so very strong support down below. In terms of big picture terms, the trend in the longer term time frame, the market is neutral because we're trading within the cloud, but bullish in the medium term and fast term time frames by trading above the Kijun-sen and the Tenkan-sen. We can see that the market is making a series of higher peaks and higher troughs, and we're just attempting to make another higher peak, but we now are finding very strong resistance in this area, and there is a possibility that we won't take out that peak at 133.20. So for the next day's trading, let's watch up to that area around the 133.20. Let's watch the top of the cloud. If we do see a bullish breakout, then that may give the market the momentum to carry on with a move to higher levels, but we do have very strong resistance extending a long way above that area. Watch the low of the current candle and the area around 132 for a potential test to lower levels, but we do have very strong support all through to the bottom of the cloud with some levels that were highlighted previously, and also the Kijun-sen and the Tenkan-sen, which are trading around the 131.30 area and the 130.70 area. Next, moving on to the Aussie dollar, US dollar, and here we see a continuation of the trend to the downside. The candle we're analysing is the candle that's highlighted at the moment. That final candle is still developing over the next 24-hour period, and we have a candle that's made a lower high and a lower low. We have tested down below the range of the series of 3 candles, but we did see price rejection and we failed to close down below that level. We highlighted yesterday the 106 level as a potential area of support, and that is how the market has acted today. 106 has held as strong support. Now we see the large shadow on the bottom of the candle representing the sellers losing commitment and the buyers taking control of the market as it traded down around there and showing some enthusiasm to trade the market higher from that level. That level also coincided with the Kijun-sen, and we suggested that because of the confluence of those two factors, that could be a fairly strong level of resistance for this market. That area still for tomorrow's trading will be very important. If we do see the market trade down through there, then the next support that we have is down around the 105.20 area, where we saw the market find support about a month or so ago, and no major support until we trade roughly down around the 104.25, 104.50 area roughly. The candle for today's trading is a spinning top type candle. It is a red bodied candle, so the sellers have made net bearish progress, but certainly not as much as they made on the previous day, so that does raise some doubt about continuation of the trend to the downside as well. Spinning top type candle is a candle of indecision. We have the buyers being rejected from higher levels and the sellers being rejected from lower levels, so a battle going on between the bulls and the bears, and neither side has really ended on top of this battle. In terms of Ichimoku, we are trading up above the clouds, so the market maintains its overall positive bias, and we are a fair way above the clouds, so it's little wonder that the market is retracing back towards the cloud. In the medium-term time frame, the market is technically still just bullish by trading above the Kijun-sen, the pink line here, but we are only just trading above there, so there is a chance that the market will trade down through there, and we could have a negative market in the medium-term time frame. The market is bearish in the short-term time frame by trading below the Tenkan-sen. We've maintained our trading down below there since we crossed below in a bearish manner for the on the previous day's trading. The market's been oscillating above and below the Tenkan-sen, so a market that's been rather directionless in the fast-term time frame. Now, one thing that is very important actually occurred with today's trading, and here we can see the market making a series of higher peaks and higher troughs, which is the definition of an uptrend in the second time frame. And that was established some time ago, and the buyers had some very solid upside momentum in that move. We now have a second time frame downtrend as well as a first time frame downtrend when the market took out this swing low in today's trading. Here we have the peak, the trough, the lower peak and the lower trough as we took out that previous trough, which was on the 14th of February. Significantly, however, the market has failed to close down below that level, so technically we don't need the market to close down below there for there to be a second time frame downtrend, but we would like to see the market close below there and close below the 106 level for a good strong confirmation of a change of trend in that second time frame. If the market does go on with that move, then we did discuss the support down around the 105.20 level, but there is good solid support all the way down to the top of the cloud, which is around the 102.30 level. So a bearish market in the short-term time frame, almost bearish in the medium-term time frame, but technically pretty much neutral, remaining bullish in the longer-term time frame.